Exploring outside the stocks. Investing in syndicated real estate, the top 4 reasons why you absolutely must have this in your portfolio. Hey guys, welcome back to the channel. I'm Dr. Jonny Walker, aka Jonny Withananchi. I am the founder of Walk of Wealth as well as Walk of Wealth Capital. I'm a doctor. I have made it my career mission to help 1,000 dentists achieve true financial freedom through passive investment in real estate and alternative assets. We have invested in over $400 million worth of incredible real estate projects across the country with great operators. If you want to learn more about investing in our fund, we have a robust deal flow. We have the best due diligence in the entire industry where we employ our own underwriters, and we collectively, with a group of experienced fund managers, we collectively do due diligence where we have a 238-point due diligence checklist that every single one of our deals go through before we provide the opportunity to our investors. If you want to learn more about that, go to our website and join our investor list so that you can see our investment opportunities when they become available. Next order of business, are you looking to take your career in passive investment to the next level? Are you looking to network with like-minded, high-level doctors as well as the top real estate entrepreneurs in the country? If so, join us at our very first in-person meetup. It's going down in Dallas, Texas, August 16th. We only have a few tickets left. We're putting the website in the description below. Click on that, reserve your seat before they're gone. All right, guys, let's get right into today's video. We're talking about the top 4 reasons why doctors should absolutely have syndicated real estate investments in their portfolio. Number 1, it is extremely risk managed, especially when the due diligence is done right. When you invest in syndicated real estate investments, you're not just investing in one. If you're investing year after year, you're investing in multiple different projects, which mitigates the risk from any one project not going the way that we anticipated. By doing it this way, you reduce the impact of any one deal ruining the performance of your overall investment in this category. Number 2, it offers true diversification. Diversifying beyond the traditional stocks, bonds, mutual funds, IRAs, 401k plans, which are all completely dependent on the market. You can add non-correlated or not related to the overall market by investing in real estate. Real estate is very much a local game of supply and demand, and is very much dependent on the individual location, even market or sub-market. Even within an overall market, there are certain sub-markets that are performing and some sub-markets that are not. So even if you say, hey, Atlanta, the city is booming, that doesn't mean that every neighborhood in Atlanta is booming. There's certain areas of growth and path of progression, and that's where everything in real estate is booming. But then other more marginal areas, things are stagnant or even going down. So that is why real estate is not correlated to the overall economy and the overall market. With syndicated real estate investment, you have opportunities to partner with some of the most brilliant real estate investors in the country in all various areas. We talk a lot about multifamily real estate. That is the bread and butter of commercial real estate. But multifamily is only one of the very great asset classes out there. Other examples are mobile home parks. You have access to ATMs, access to Bitcoin, access to RV parks, marina parks, hard money lending, right? Fixed income, investing in debt, investing in preferred equity. There are virtually a million different things you can invest in, but rather than investing haphazardly, you should have a strategy. Once you have the strategy in place, that's when you find suitable investments that are congruent with that strategy. That helps you avoid the shiny object syndrome, where it's like, oh, that's great over there. Oh, that looks good over there. No, well, we know what our strategy is, and we're only looking for investments that further our goals. That's another topic in terms of asset allocation. That's what that's called. But today in this particular section, we're talking about diversification. So what I'm trying to tell you is that with these type of syndicated investments, you have a vast variety of things that are possible to invest in, right? So you can diversify asset classes, and that way, not just geographic area, right? So you can diversify by investing in different geographic areas of growth. You can also invest with multiple operators, right? So it's not just, hey, betting all on one jockey here, but we have a great jockey here that's doing incredible business over here. We have another jockey over here that has $2 billion worth of multifamily real estate. There's another great jockey over here that's building a mobile home park empire, and he's put together $200 million of assets under management there. Now, you're not dependent on one market. You're not dependent on one asset class. You're not dependent on one operator. This greatly reduces risk, right? So that's where diversification with syndications. Number 3, extremely high growth potential. The stock market over the last 30 years has averaged about a 7.59% return. Doesn't sound that bad, but once you subtract fees, once you subtract inflation, once you subtract volatility, once you subtract taxes, the return is more like 3 or 4%. Whereas the returns with these syndications can vary from 12%, 10%, 8% IRR, and to extremely high percentage IRRs where you're making 50 to 70% IRRs, depending on the project, depending on the risk factors. But the point is, the potential for returns are much higher. Now, if you have the access to robust deal flows where you're seeing lots of deals, you have the ability to analyze these deals at a very professional level so that you can cherry pick the very best deals. If you do that consistently year after year, you will be very wealthy, point blank, period, full stop. Pause for effect, dramatic effect, but absolutely true. Okay, that sounds pretty easy. Okay, so all I gotta do is get a good deal flow and cherry pick the best ones and then really analyze them at every angle so that I can make sure that I'm making good investments. And if I do that every year, I'll be very wealthy. Well, that part is a little trickier, right? Knowing how to do it, knowing what to do is the active part of passive investing. The best way to do it is either learn it yourself or partner with people that are experts at it. Wink, wink. Shameless plug here. We do the best due diligence in the game. We have a group of 60. I'm very proud of this. This is very recent. We put together this group where we earnestly are a group of like-minded fund managers that are very serious about doing due diligence and trying to make sure that we can reduce risk, as much risk as possible, to protect our investors and conserve their capital. Now, by doing this, we gained a reputation of doing extremely good due diligence, and we've attracted operators that come and give us, pitch their deals and their incredible businesses to us in hopes that we will fund it. Now, we have robust deal flow because of that, and we're able to cherry pick the very best deals. And when we provide investors deals, we're giving incredibly vetted, trusted deals that are also incredible opportunities. Join our investor list. It's on the website. You can join that so you can get on our email list so you can find the deals when we have them. Number 4, these investments, once you've done that first part and you've found which deals you want to invest in, once you invest, the deal is now completely passive. People will tell you, gurus will tell you there's no such thing as a passive investment when it comes to real estate. Well, that is absolutely not true, because with these syndicated investments, as an LP, you're a limited partner legally. You have no material participation in the deal whatsoever other than investing capital, collecting your returns, collecting your profits. And there's one thing you have to do. You have to take your K1, which is a summary, accounting summary of your statement. You take that K1 and you email it to your accountant, and that's it. So these investments are truly passive. You can participate in incredible real estate opportunities without having to do any of the work, right? So all these great guys, great people that you see making money with car dealerships, with food truck parks, businesses you haven't ever thought of, but guys that are experts in their own little niche in the corner of the world, when we have the ability to participate in the upside and the profits that they're earning. So it allows us as dental professionals to be dental professionals, and we partner with professionals that are in their zone of genius. We stay in our zone of genius, and everybody does well because of it when we work together. If you're ready to explore this world of passive investing, I encourage you to schedule a call with myself or one of my very helpful teammates. Again, it's on the website. It's in the link below. You click on the website, there's a link to schedule a call. I hope to hear from one of you or many of you. All right, guys, that's all the time that we have for today. If you got any value from this video, I please ask you to smash the like button, number 1. And also, please share with your like-minded friends and colleagues so that we can help this channel grow and we can get this information to the people that so need it. All right, to keep the information going and your bank accounts growing, click on the next video, and I'll see you over there. Boom.